Hello everyone! Have you ever wondered how to fairly allocate factory overhead costs, or BOP, to each product? In accounting, there are several bases we can use to charge these overhead costs. Let's break down 5 of these methods to see how each one works, and then we'll compare them using a real case study. First is the unit of production method. This is the simplest way to directly charge overhead costs to products. This method is most suitable for companies that produce only one type of product, as it assumes every unit consumes the same amount of overhead resources. Second is the direct material cost method. This is used if the overhead costs vary significantly with the value of raw materials, such as material insurance or storage costs. It assumes that the more expensive the material used, the higher the overhead it should bear. Third is the direct labor cost method. This base is chosen if overhead elements are closely related to the total wages paid, such as employee income tax or benefits borne by the company. It's an effective method when wage rates among workers are relatively uniform. Fourth is the direct labor hours method. Unlike the previous method, this focuses on the time spent creating a product. It is highly accurate when the production process is labor-intensive, and overhead costs are driven by the duration of manual work. Finally, the machine hours method. This is the most suitable approach for modern automated factories, where overhead costs like electricity, fuel, or machine maintenance fluctuate based on how long the machines are running. Now, let's see these methods in action. Imagine we have an order that produces 200 units, uses RP30, 0 inches materials, RP20, 0 inches labor, takes 200 labor hours, and uses machines for 300 hours. How does the overhead charge change depending on the base we use? Look at the massive difference in the results. The overhead cost for the exact same order ranges from as low as Rp8,000 to as high as Rp200,000. Notice that when we use labor hours, the cost spikes to Rp200,000 because this specific order is very time-consuming. On the other hand, the labor cost method yields a much lower result of Rp8,000, which might happen if the workers for this order have lower wage rates. This comparison proves that your choice of allocation base isn't just a calculation, it directly impacts your product's final price and company's profit. Selecting a base that doesn't reflect your actual production reality could lead to underpricing or overpricing your products. In conclusion, there is no single right method for everyone. The best base is the one that has the strongest cause and effect relationship with your overhead costs. We hope this tutorial makes your accounting studies easier. See you in the next lesson.